Yeah. What's up, replayers? What's up? What's up? We are live. Welcome to the show. When your 90 pip days all of a sudden look kind of regular. Oh, this morning or just now? Yeah, I wasn't on at 6 this morning. I was up until 5. Yeah, there was no movement. There was no movement. I wanted to wait until you guys got, until we got a fire off. Prime just went short at like 72. Guess who made another bad call? I don't have to guess, baby. I don't have to guess. We know what's up. We know who the #1 Forex mentor is. I put out the call. Anybody wants to step up? You don't even have to beat me. Just get half of my pips. And I will personally come on my Periscope and say, this guy knows what he's talking about. He knows how to get some gains. He's got a little bit of alpha. It's a standing call. I'm not even going to take down the call because I know all these guys out there that claim to have some type of alpha do not. So what's up? How was the day, guys? I hope you guys made some money. Yes, Prime just went short the euro, but it's going to be a very slow trade. It doesn't look like there's much volume in the market right now. There's not much going on, barring a headline, but this is what I call a leak trade. It basically just leaks downward. Jappy's moving, cool. Yeah, stuff will move, you know. Traders gotta eat. Traders gotta sleep. Well, maybe not sleep. The name of this song in the background is All I Do Is Hustle. I love it. I love it. All I do is hustle. What's up, everybody? So who made some pips today? Who made some pips today, guys? Who's making pips? Who's doing it? Who was in the market? Where's the hearts? Where's the invites, guys? Diaz, that's cool. Learning and sitting on the sidelines while you get a strategy is not a bad thing. That is a position in itself. First time viewer, Underrated Athletics, welcome to the room. Thank you for coming in the room. Nice, Mason, nice. So I'll give you a brief introduction. My name is Jay Salvati. I am an algorithm designer, trader, entrepreneur. What you're seeing right now is my coveted algorithm called FX Prime, playing the Euro USD. This is a 1-hour chart. Today, we got out of the market at about 11:50 a.m. with 200 pips of gain. It was a good day. I can't say that I didn't play Ice Cube for about an hour straight, from 12 noon till 1. If you're feeling like a pimp, man, this is my channel right here. This is my channel. I'm just going to bump this every single night. What's a pip? A pip is a percentage in point. It is a unit of measurement in the currency markets. But if that type of question right now presents a challenge to you, you have to go to babypips.com and spend at least about 20 hours of reading on babypips.com to kind of understand what exactly you're looking at, okay? Because otherwise you won't understand when we talk about pips and killing pips and candlestick boners and hashtag, you know, pip apocalypse. When we talk about all these things, you're not going to understand it. Pip, exactly, it's a digital pimp. It's a digital pimp, and we accumulate digital pimps because we are the pimp of pimps. It's like, it's a round table of pimps, basically. Yeah! I like it, guys. I like it. But yeah, you know, we'll see. I mean, this is turning into a leak trade. You know, 1335 is the... Yeah, unfortunately you can't control your colors, but thanks for the hearts. The 1335, 1334 fib level, that is the 0 fib drawn from last week around this time. And that has been holding well with pretty much every candlestick wick that has touched it. Now, ePimp is a pip, yes. I mean, if you're a beginner, quite honestly, you're going to be staring at this and you're not going to understand a single thing. And you're not going to understand the value nor the impact that gaining 10 or 20 pips or 30 pips actually means to your account. You're not going to know what that means to your bank account. You're not going to know what that means in terms of beating the competition. Okay? You're not going to realize the leverage involved. So let's talk about that. Let's talk about leverage, okay? Let's talk about leverage if you are trading. Let's say you've got a small account. Let's say you're controlling what is called a mini lot, which is 10,000 units of currency. Okay? You're controlling 10,000 units of currency. Your pip size is $1. So it's $1 with every pip. If you gain 10 pips, you gain $10. Doesn't sound that impressive, but this is a lot size that a beginner would use. And it will give you an idea of how exactly the account can grow over time or decrease over time, because you're going to get a real sense of what it's like to be in the trade. And even though it's only $1 a pip, you can make money like that. We would have made $200 today trading that mini lot, which is insane. I mean, you're only controlling $10,000 worth of currency. You know, if you had $1,000 in your account and just you know, levered that up 10 times, which is, you know, any standard account can get levered up 10 times. Okay, you have $1,000 in your account, you make $200. We essentially made 20% in one day. Now, I've been around the world, and I've been player hating, and I haven't seen many many investment vehicles that can return 20% in one day. So when you put it into the context of the return, you see the power, okay? The context of the return. All right, so that's your 10,000 mini lot. You're not balling with $200 a day, but I'll tell you what, if you can consistently pull out $200 a day, if you do it with very little work, that's not bad. That's not bad residual right there. Okay, you're talking about $1,000 a week, $4,000 a month. That will cover quite a bit for most people. Exactly. $4,000 a month is nothing to snicker at. $4,000 a month in addition to your current income would likely make things extremely easy. And now you can start thinking of your lifestyle and your income from an investor's viewpoint, because you'll likely have some risk capital, especially if you're a frugal person. Right? If you're a frugal person, and I don't care what anybody says, the longer you put off balling, the better. Everybody wants to have the fucking Lamborghini and the LaFerrari. And trust me, I know plenty of people. I know a guy who collects Ferraris. And let me tell you, he did not get to that point by being a spender in the beginning. For the first 20 years of his career, he invested every single cent back into his business. Every single penny back into his business. Wore 3 suits a week. 3 fucking suits a week. Drove an old Audi A4 to work. and was banking 6 figures a month. And no one knew it. But that's how he got ahead. And now when he walks into a Ferrari dealership, he has a concierge at the Ferrari dealership. You know what that means? That means he walks in and he gets anything he wants. Anything. Because he was frugal to start off with. He could have leveraged himself up in the beginning as he started making income and spent his money on things that did not offer return. Undercover baller. There's nothing wrong with that. There's nothing wrong with sitting the sidelines, guys. Yeah, that's me. Why? Am I talking differently? I had an ab workout. Maybe it changed my... maybe I'm an octave higher because of my ab workout. I have... What you emailed me? But it's even better. You don't want people, being friends with you or cuddling up to you because you might be making money. That's not the friendships that you want, right? They come back to bite you in the ass anyways. Whether it's with a significant other or a circle. It doesn't matter. It'll come back to bite you in the ass, I promise you. So, check this out. Let's get back to the example. Real shit. Real shit. Mason, I just said that Prime fired off short. Where'd you go long at, dude? Alright, this music's just getting weird, guys. We're gonna have to change the music here for a little bit. Oh, sorry. Yeah, you had a chance to get back? Yes, I've begun sending the emails, but I'm writing them by hand, so I want to make sure that there's no typos, etc., etc. I have most of them typed up, so I'll send them out one by one in a little bit. So the example, we got the mini lot at $10,000, $200 a day. You're not balling, but that's okay. You're making extra income. John, what's up? What's up? What's up? So now let's move to where you start balling with a traditional lot size that's controlling 100,000 units of currency. Of course, man. I'm a marketer. I'm an entrepreneur. But I do not misuse lists. I value my list, and you will only receive value. That I guarantee. Thank you for the invite, Jose. So now we move up to the traditional lot size, 100,000 units of currency. That's funny. Well, as long as your net is up, your net is up. There's no such thing as a person who goes without losses forever, guys. There's no such thing. However, the best traders know exactly when to cut them. I will say that. So, we've got our traditional lot, 100,000 units. On a day like today, that's a $2,000 day. Now, you don't have to be a genius to realize that 2,000 times 20, now you've got a 40K month. You're making $480,000 a year if you can continue that pace. $480,000 a year is more income than 95% of the entire U.S. makes. So taking 200 pip wins on a traditional lot size, you will be in the top 5% of income earners in the whole United States. Now, let's move up to super ballin'. 10 lots. You're controlling 1 million units of currency. Okay? Think of that. You're controlling 1 million units of currency. At that point, your pips are worth $100 a pip. Okay, so we went short at 66. We would be up $600 right now from 1066 to 1060. $600 since I started this scope. Yes, 10 lots is no playing. If you're trading consistently 10 lots, you're playing with some stuff. You're playing with some fire. Alright, you have to realize that the average trader at, say, Goldman Sachs pulls in about $3,500 to $5,000 a day. We're talking the best of the best. I'm talking about the GSAM trading unit at Goldman Sachs. You're trading 1 million units, $100 a pip. Do that math real quick. Today would have been a $20,000 day. Right? $20,000 in one day. You've just beaten the average bulge bracket bank trader by 4 to 5 times what they make. You're beating the best by 4 to 5 times what they make per day. Think about that for a second. At that point, you're trading 1 million lots consistently with the calls that we've been making. You're making 6 figures a week. Just basic math. Just basic math. You want to talk about Wolf of Wall Street money? You're pissing on Wolf of Wall Street at this point. The understanding of how much leverage that is will not hit most people until they have a loss. The first time you have a loss, controlling 1 million units, you will understand exactly how powerful the gains are. Jay, this probably isn't for you, homie. You're probably not ready for this, to be honest. Because if you hop in a room and you're trying to tell a professional how to teach, that means that your cup is not empty, homie. That means there's no help for you here. That means there's no help for you here. Because you're not willing to learn. You gotta understand, today, this algorithm took 200 pips from the market. I have a standing call out. Any Forex mentor that can make half that and show it on the scope, I will personally come online and pump them up to all of my followers. And I will tell them that they have alpha. And I will let everybody know. If you guys need to contact me, info@fitbusinessman.com. info@fitbusinessman.com. If you'd like to get involved with the beta of the membership for the alert system, then you can send me an email. Yes, correct, that's it. LeBoy thank you, buddy. Thank you for posting that. I wish the broadcasters could post things while they're actually giving the broadcast, but That's not possible. Maybe in a future update. So, if your cup is half full, let me just say that people will come in this room and they will not understand this. That's one, there are two types of people in that category. Thank you, Jose. Appreciate that. They're the people that will come into the room and say, man, I don't understand what I'm looking at or what's going on, but it sounds interesting. There's some numbers being thrown around. And then the other type of person comes in the room with a cup half full, and there's nothing I can do for that person. There's nothing. Warren Buffett himself couldn't do anything for that person. Because whatever is spoken about, as the words filter in through that person's ear, instead of trying to understand what's being said, they let their predisposed knowledge filter. Thanks, Spencer. So if you let your predisposed knowledge filter good information, probably because you're overly defensive, which is understandable. There's a lot of scam artists, what have you, online. So everybody's got a high defense up. That's understandable. But then you need to go back on my catch account and see how we've been averaging literally 80 pips to 150 pips a day for the past 2 weeks. All right? So if you come in the room and you're like, man, forget about how much I can make. Just tell me how to set this up. You're jumping the gun. It took me 10 years to learn this. There's nothing I can tell you in one scope that's going to make you a better trader. There's nothing I can tell you in one scope that's going to give you 10 years of in the trenches, losing money, making money, coding, getting mentored by people worth 8 figures. There's nothing that I can tell you in one scope that could simulate that. Make music. It's funny you say that. It's funny you say that because it's very similar to music frequencies. If people are not in the music in that industry, in the music industry, they won't understand what they're staring at. But I understand what you're saying. And that's very interesting because music, yes, music as well goes on what's called a time series chart line. So yes, it does look like that. However, that's not what we're doing here. We're trading currencies here. Right, ST, couldn't have said it better. Couldn't have said it better. There's a difference between cynicism and healthy critiques. 3 pairs at once. I personally wouldn't do that, but I mean, it depends. First of all, like if you have multi-monitors and you can just glance up and monitor everything all at once. And you've got, quick buttons where you can actually exit positions quickly and enter positions quickly. You might be able to get away with it. Personally, my point of view is that I like to focus on one pair. I like to focus on one pair and get to know it and milk it. We would be getting out right here. So we took that for 6 pips. Like I said, this is going to be a very choppy trade session until probably a little bit later on tonight. There's no force in the market right now. What I mean by that is that a lot of the players have exhausted their margins because of losses earlier in the day. If you were short from 1366, where we originally took the short, yes, that would be a 6 pip game right there. And I mean, just do the math. What's the movement up to this point? We went actually short at 1367. This will probably continue slightly downwards, but we're likely to get a lot of sawing around this 1359 level. So we could go through it, come back up, I'm waiting for a particular point to enter a larger move. Right now you can see as the ticks flow through, there's no density to the ticks, which means that there's not that much volume, okay? Alright, ST. No problem. No problem, Troy. Yeah, Baby Pips is really good for basic knowledge about Forex. You won't get much strategy out of it, but you need to have the basic knowledge before you can actually take on the strategy. A foundation of knowledge has to be attained either simultaneously while you're learning strategy, which would be the case if you were with a mentor where you were shadowing someone. You could learn strategy simultaneously with basic knowledge. So maybe we have a reversal coming here. You see prime going long. I don't expect very large moves, but like I said, prime is better at calling the shots than I am. I've created a monster, basically. This is the Frankenstein of trading. If you were to if we spawned a cross between Michael Jordan and I don't know, Elon Musk, I don't know, take the top players in like 3 or 4 different industries. That's what we're looking at. That's what we're looking at. So you can learn the knowledge and the strategy together, which is great. If you have a mentor that can teach you strategy while you learn the knowledge, we're talking about cramming. Yes, Steph Curry with the pips, boy. Steph Curry is a beast. Hey, you know, I'll tell you what. Anyone who is at the top of their game, who finds alpha, whether it's in basketball or trading or something else, has something going on. It just went long, correct. We went long at 1360, but, you know, there's not much force in the market right now, so you have to be very aware that if it might give 2 or 3 turns before we actually get a nice signal. But, you know, on that turn, if we entered, if we're trading large lots, you know, it's like, what, up $200 already? I mean, you have to understand that opportunity is everywhere. Opportunity is everywhere. It's just, do we have the ability to recognize the opportunity? And so an algorithm is trying to recognize opportunity faster than a human can. We're doing computational investing is essentially what we're doing. Computational investing, where the computer calculates data faster than any human can. Scooter Daddy. I like that name, man. Sometimes I do play the harmonica. Sometimes I do play the harmonica. I can play Big Pippin on it. I tell you what, if anyone, anywhere, any Forex mentor can get half of my pips on a daily basis, I will come onto my scope and say, ABC person has some alpha going for you guys. Watch out for this guy. They know, guy, gal, whoever it is, they know what they're talking about. They know what they're talking about. Last week, it depends on the time series. Last week we played the daily. We made 275 pips last week. On the hourly, we made 575 pips. So it depends on the frequency. If you trade a faster frequency, which is a faster game, it's a quicker draw. You got to be quicker on the draw. But we don't make pips. We actually leaking pips at this point. We're actually like leaking pips. Whoa. I'm sorry to hear that, bud. So essentially what you have to do, if that's your situation, is you have to learn how to control risk. So if you don't control risk, then what will happen is that your losses will always be bigger than your gains, and your net will always be negative. Leaking pips. Yeah, it's kind of like if you have a hole in your pocket and you keep putting money in your pocket and it just keeps on leaking out. It's kind of like that scene in Dumb and Dumber when he gets out the car and is just flipping $100 bills in the air. I'm joking with you, bro. I'm joking with you. But yes, we are essentially leaking pips at this point because we haven't had a single down day. I like to joke with you guys, so not everything can be taken, literal. I tend to laugh after I say something that I think is funny, so hopefully that's the give to my corny jokes. The Gladys joke. Hashtag candlestick boner. Was it John who thought of that hashtag candlestick boner when we were trading? We got like an 80 pip candlestick on the 2-hour chart that we were trading. And it just kept growing, man. The candlestick just kept getting bigger and bigger. And we're like, oh my God, it's a candlestick boner. And everybody in the room just started cracking up. So it was pretty funny. You see how slow it is right now. The trade right now is very slow. Which I don't like because right now we do have markets open. Like there should be some movement. But what this usually means is that algorithms are testing the price levels. What platform? TOS. This is TOS. So we've got Sydney and Tokyo markets open right now, which tend to be pretty liquid. But what we've seen for the last 2 weeks is the strength of the London markets, man. Once Frankfurt and London open, once Frankfurt and London markets open, man, they come in with so much force. I mean, we're talking tens of billions of dollars. When they lay down their trades, they don't joke, man. And we get movement when they come into the market. We're getting 30 pip, 40 pip candles when Germany and London come into the market. Yeah, the thing with the crash is a lot of people will try to predict a crash, all right? And they try to use indicators and they try to use reverse metrics, which are basically historical prices. The fact of the matter is that right now, economically, we are in a state of wage deflation, okay? The Fed knows this. The Fed knows that if they don't print money and if they raise interest rates, that the deflation will accelerate and essentially they'll crash the economy because right now there's too much debt on bank books and off bank books that will not be able to be serviced in any way, shape, or form if they don't keep printing money. Now, that may be over a lot of people's heads, but basically, economically speaking, is that there must continue to be inflation. There must. So when you look at prices of the S&P or the Dow or the Russell 2000, right, quantitative easing. When you look at the prices, you have to look at the prices on an inflation-adjusted basis to actually get what's going on in real terms. In the last 10 years, with all of the printing they've done in the last decade, the S&P 500 is net negative like 0.62%. All right, so we're basically at the same place we started 10 years ago, adjusted for inflation. I don't think they'll be able to. I think that is a false. It's basically their way of bluffing. Because here's the deal. If they raise interest rates, the economy crashes. Now, how do I know that? I hope that's your next question, right? See, there's a catch-22 whenever the Fed does anything. The Fed thinks that they can control growth in the economy, but they can't. They cannot control growth in the economy. Growth is created by inventors, investors, business owners. That's how growth occurs. The government cannot create growth. The government uses money, and we essentially get nothing out of it. Exactly. The real economy, actually the stock market means a lot for the top 5% because as the inflation is created, the people who have first dibs on low interest loans are the savvy financial people of the world. Now, let's say that tomorrow, and let's say everybody goes along with what I'm about to say. Let's say tomorrow the US becomes a social economy. Everybody in the US makes $150,000 a year starting tomorrow. All the billionaires get wiped out. All the millionaires get wiped out. Everyone's on a level playing field. What would happen? They've done studies and they've done simulations. They've done studies in classrooms. What usually ends up happening is this. Initially, the hard workers, the entrepreneurs, the business owners stay and they accept it. But what happens is because these are smart individuals to begin with, they learn to just play a different game. They become expatriates. They'll move to a different country, and within another decade, they'll accumulate all the money again. Real talk. Real talk. And so people will try to say, hey, you know, that's a great idea. Everybody gets equal pay. Ooh, that sounds like such a good idea. Free healthcare for every single person. You can't go wrong with that. They don't understand economics. Yeah, and it never has. And technology will only accelerate the rate at which it does not work. Because who do you think is going to have access to the best technology to accumulate more money? The smarter people, right? Smart investors, smart financiers are going to have first dibs on all the technology and money to accumulate more of it. Well, you know, but see, that's not the government's job, right? I think what needs to be done at this point is the Federal Reserve needs to come clean about the scheme that they're running, and people need to understand that there has to be a reset. And we have to place a tremendous emphasis on technological investment and knowledge. I have no idea what that means. So, like, the more we invest in technology and technological knowledge and really, really start having a reward system that rewards people for taking risk and inventing things. Yeah, of course. You know, and you would think that's commonly known, but most people don't know that. Most people don't know economics from that point of view. But, you know, back to the whole idea of, you know, what's happening in terms of interest rates. If the Fed raises interest rates, they're essentially going to stifle the entire economy. And right now, people don't have the wage growth nor the wage savings nor the stability, right? No one knows if they're going to keep their job next year. I mean, one of my first scopes I did was on how BlackRock is firing 400 people. BlackRock being one of the best financial institutions on Wall Street. Alpha, you know, they're like me, leaking alpha. Actually, they're leaking quite a bit more alpha than myself. And they're laying off 400 people. And you have to ask yourself, is that because they've somehow come up with computer systems that are replacing the 400 people, or is it because they actually can't use those 400 people? All right, Jose. So you see, we have very slow trading right now. However, we took 6 pips down. Now we took him, 5 pips up. It's 11 pips. We're like, it's like it's leaking. This is what I call a leak trade. It's a very slow thing. I'll tell you what, though, it'll probably pick up later on tonight. Thoughts on ETFs? I haven't been playing ETFs. There's just not enough volatility to get me interested at this point. My system is basically extremely good at taking volatile moves. So anything that has a lack of volatility, I just don't play. Yeah, Frankfurt will open at 2 a.m. Eastern Time, and then we'll get ready for the so-called morning session on the East Coast. That's how I had 120 pips from 3 a.m. last night, or this morning rather, 3 a.m. to 6 a.m. this morning, 120 pips for myself. At this point, I'm very reluctant to work for anybody else, to be honest. for any amount of money. I read the book quite a while ago. I heard that the movie was a little bit different than the book. I heard that the movie was more from a comedic standpoint, but it looks funny. Yeah, it looks funny. However, I don't think Michael Lewis, when he wrote, he did write that book, right? I'm pretty sure he wrote The Big Short. I don't think he had it in mind that he wanted it to be made into a movie that was a little bit funny, because most of his books are written from the point of view of trying to wake people up. But I think he understood that once you take things to a big screen, you have to appeal to the masses for it to get some traction. That's pretty interesting. So explain to the people what we're seeing. What we're seeing here is the Euro USD on a 1-hour chart. We're watching how the algorithm is taking short and long positions. In my own account, I have multiple monitors and keyboards, so I'm doing things that isn't necessarily on the screen right now. Each time the line fires off, that indicates a position being taken. And so right now, in the last 2 hours, we're up 11 pips, which is nothing to write home about. We're already up 200 pips today, exactly 200 pips. I exited right. I took this long. I took both this short and this long here, and exited right at the was it 1388 level here. No, sorry, rather the 1400 level. This candle went up at 1399. It was an exit. So this is one of the only instances where I've actually exited at the top of the candle perfectly like this in quite a while. And at that point, I've been flat, and then I just hopped on tonight. We took a short and then a long. Move the camera up a little. There's not much more to see the top of that candle. It's basically the top. It's right there. My computer's actually in the way of me moving it up. But yeah, that candle top is at, if that's what you're trying to see, that candle top is at 1453. So I usually come on to the scope every day, chill with you guys. You guys are welcome to tag along on the trades, make some pips. No, I've been graduated for quite a while. I'm 35, so my education at this point is autodidactic, because I don't think there's a college out there that that would enjoy my company, because I'd question the professors a little too much. They tend to not like when people question them. Right? As soon as you question the mainstream, you will become ousted. You will become hated. You will become that person. Plus, I would not pay for any type of university education at this point. Education is a commodity. Right? Education is a commodity. There's nothing that you could learn at MIT that you can't hop on Wikipedia and take down. An intelligent person will study on their own accord and will push themselves in that regard and doesn't need to necessarily have someone hold their hand. Right? Khan Academy is excellent. There's so many online institutions like Coursera, Udemy, Khan Academy. Between a handful of online educators, you can learn everything that you need mathematically to kill the stock market, to become a financially savvy investor, to become even an accountant. So you don't get the degree, correct. So you have to find alpha in a way that does not rely on the market giving you a pat on the ass and saying, hey, you're good to go. Right? So if you rely on institutions, and you got to see where the play is in that, right? So institutions are basically allowing the inflation through educational debt to occur, if that makes sense, okay? If it wasn't for the little piece of paper that they hand out when you walk across the stage, a lot more people would be smarter and better off, and would not be saddled and shackled by 6 figures of debt to get a job that won't pay 6 figures off for at least 20 years. It's no longer a school loan. It is a school mortgage. So they're trying to talk you into a school mortgage, and they give you the false guise that as long as you get a few letters out of your name, and I have them, or after your name, that you will somehow excel. And I'll tell you that some of the smartest people I've dealt with are from foreign countries with no degree. There are 6th graders in China that can solve math problems on an abacus faster than Harvard graduates can here. 6th graders in China. You got to look at that. So if I would tell anybody, to place a value on education, yes, the value is on education, absolutely. But don't overpay. If you're not going to overpay for a stock, if you're not going to overpay for an investment, why would you do that for education? It's based upon a completely false fleecing of the youth of the nation. And all these loans will default. I promise you that. I promise you that all of the loans that have been given out in the last 5 years educationally, about 90% of them will default. And that's the primary reason, exactly. That's the primary reason why the government has made it illegal for you to dump your educational debt if you declare bankruptcy. Their number one fear is that students will not be able to service the debt that they take. So if you want to talk about modern day slavery, there's no better example than our current educational system. And that's the 100% truth. And the people that think that I'm downing education, it's actually quite the opposite. I'm an investor. Everything I do, including my educational tracks, is based upon the ROI. Yes, 40% and growing. And actually, I've read even higher than that. If you go to shadowstats.com, they've got some very interesting articles. The banks lie about all of that stuff. You know that, right? Like, what they report is not necessarily what's true. Because the last thing you would want to do is spook a public. Come on, what, Mason? You think the banks are going to tell you? Absolutely. Absolutely. Your bank is still sitting on, I can guarantee that you have local banks wherever you live in the United States. Some of these local banks are sitting on $1 billion or more of non-performing mortgages. Sitting in some type of side account, a side pocket account where they don't have to necessarily give any type of financial reporting, and they're just sitting on it. And so they transfer the asset to a private entity. It's no longer under the balance sheet of the bank. And it disappears, so to speak, from the financial sheets of the institution. It's forensic accounting. I mean, you don't actually think that all of those mortgages that went underwater in 2008, you don't think someone snatched them all up, right? You haven't heard anything about what happened to them. Yeah. It's been very hush-hush, it's because, as I said, they don't want to spook people to dumping more mortgages. The public opinion does count. If people start seeing headlines of more mortgages going underwater, they get more fearful, and then they start saving more. And what happens when people start saving more? Right? When they start saving more, that creates more deflation. So the Fed has to start going negative interest rates. If people save more, the Fed will actually have to penalize people to save. So they go negative interest rates. It's going to cost you money to keep money in a savings account. Negative 1% if you save money in a savings account. People think that day is not coming. I'm telling you, it's going to come. Because the last thing the Fed wants is for people to be spooked. They don't want... If people don't spend, the engine doesn't work. Yeah. Whew. Let me tell you, that in itself is a lesson. There's too many bad things happening in energy. We had originally the natural gas prices that got slaughtered. You have a combination of people that are going to be driving less and using cleaner sources of energy. Right. And I don't know if you know who Mike Maloney. Is it Mike Maloney? Let me pull him up. I haven't read his stuff in a few years, but he came out with a thesis some time ago. He's a big gold silver bug. And he came out with a thesis a few years back about how deflation was going to precede hyperinflation. And everybody thought he was full of shit. This was like 2009, 2010. And it turns out he pretty much hit the nail on the head. It's been wage deflation coupled with, high-end property inflation, all right? Which, by the way, the high-end property has now shown in both San Francisco and New York. High-end property year over year has had its first decrease in, I think, a decade. That's 1 million units. That's funny. So, you know, the high-end property was becoming a tax haven for offshore wealth, especially in New York City, where people were snapping up properties that were in the $5 to $20 million range like it was no tomorrow. And so everybody used that as a, everybody in real estate was using that as an indicator that, housing prices were going up again. Everything was inflating. And now this past report that I just saw, I forgot who put out the report, they said that high-end property is now year over year down. And not by a little bit, by at least 25%. So, technically speaking, the high-end real estate market has already begun to crash. But who knows? I will tell you this. If the Fed raises interest rates and the economy takes a sharp dive down, they'll never, ever outlive that until the next generation. Yeah. The next generation forgets the financial woes of this generation pretty quickly. So it's a generational thing. They can only fleece one generation at a time. Yeah, I mean, they like, if you look at the whole formation of the Fed, they did it slowly, over a period of generations. It's like, it's one vote at a time, essentially, on some type of addition to some law that no one reads. And over a period of a decade, you can tip the favor, the financial favor of the economy in your direction by just changing laws one vote at a time, and that's the way it has to be done, because information spreads too fast nowadays. If you try to do something, there are smart people out there. People do read headlines. Oh yeah, I didn't read that news story, but the thing about the crazy thing about a lot of real estate purchases is that some of them, they find a way to get a lot of the risk offset by the government. Biggest ever. What's their track record with timing, though, right? Speaking, right? They don't. Their track record is not worth bragging about. U.S. near full employment. Some slack remains. Really? Really? All right, we've gotten past full retard into full delusional retard. I mean, if this doesn't say delusion, I've never seen a headline that says delusion like this. Near full employment. Near full employment. Where? At McDonald's? Michigan? Where is their full employment? You mean to tell me California, Michigan, and all these other places are included into that statement? DC, right? Yeah, I mean, if you take Washington D.C., if you're talking about Capitol Hill, yeah, there's full employment on Capitol Hill. The only place where there shouldn't be full employment. The only place where employment should be limited to a 2-year span, no matter what your position is. Making See, that is just one of the craziest headlines I've ever read. That is just so insane to see something like that. And it's like, wow, anything to kick that can a little further. Anything. U.S. is near full employment, yet we still have zero interest rates, basically. I think the last time we had full employment, weren't the interest rates a little higher, Janet? Last time we had full employment, I'm pretty sure the interest rates were a little higher. Amazing, amazing, amazing. Whew. Bernanke says it's a mistake to put all of the burden on central banks. It's just amazing. I mean, like, I don't even know how much of it is political and how much of it is just people trying to take the headline and literally just trying to get good headlines out there, like positive headlines. I'm reading this headline, and the more headlines I read, the more I shake my head. SMH, SMH. Yeah, it's essentially the media machine. You know, controlling the public opinion. And I guess it's better than the alternative, right? The truth would make people go nuts. I see their point of view, but the fact is that you shouldn't have let it got this far. Yeah, Mason, I'm not even sure that will help at this point. You know, I'm under the belief that you know, you can repair a bad car up to a certain point, and then from there you just have to get a new car. You know? And this car has been bad for a while. Yeah, that's for sure. Well, that's the thing, is that there's really no such thing as free, right? You know, so many people are like, oh, can I get this for free? Can I get health care for free? Can I get the repairs in my car for free? There's no such thing as free. Someone has to foot the bill. Someone somewhere has to put in extra work to account for the difference. And the only reason why people think that, you know, free is even a possibility is because we lack financial education by such a large margin in this country. I mean, if you go to other countries, they're so financially savvy compared to us. Their kids have better financial acumen than most of our adults. And the lack of financial knowledge is the only thing that keeps the negative state going. You know, you have to change the state of the entire economy. You have to do it with really good education, first of all. There shouldn't be a person in the entire United States that graduates without knowing how financial markets at least work. Yeah, that's a whole nother story right there. Were you on last week when I talked about how Saudi Arabia is imposing like all of these, you know, they try to stay away from the word taxes as far as possible, or as long as possible, but essentially the largesse of Saudi Arabia is catching up with them, and they need to start imposing some tariffs and I guess you would say taxes. I don't know any other way of putting it. They're basically going to tax sugar consumption, all right? So junk food and sugar consumption and energy and like high-end properties and high-end spending, luxury goods, because they're running, I guess, now a huge deficit. And so I said, that's what I said. I said, when the nation of, platinum and gold covered luxury cars starts screaming that we need to slow down spending, that's when I start getting nervous. Your chrome plated Ferrari is likely to not be paid for by oil money in the near future, and they're trying to offset that decrease in oil cash flow, and I mean energy cash flow as a whole, not just oil but also natural gas. And when I saw the headline, it just caught my eye so quickly, because I thought to myself, wow, when they have cash flow problems, I'll get nervous. The fence rolling Lambos. You laugh about that. It's not that far from the truth. Not that far from the truth. And I'll tell you why. So when I was training, I used to be a personal trainer, a pretty high-end personal trainer. And so I met one of my clients at a country club here in New York to train him. And there were we'll just say there were a few very nice luxury cars parked outside, which there always is. Any given day outside the country club, there are at least, 24 cars that would cost over $250,000. And so I remember hearing one of the valets saying to a woman that asked, whose car is that? It was this extremely nice Ferrari 458, very customized. And it was like when the car first came out, nobody had any, and it was like the new deal, and everybody wanted to know who owned the car. At the country club, it's not like they couldn't afford one themselves. They were probably more enamored at the fact that how did someone else get that shit before me? So they were probably questioning that fact. They were a little confused. And the guy said who owned the car, and I won't tell you who owned the car because, well, you can look it up yourself. But the person that owned the car was a politician, was a person who was on the table to be voted in as the next Fed after Bernanke. So you can look it up. There are only a handful of people. All right, there are only a handful of people. And I remember seeing the look on the lady's face when the guy told her who owned the car. Right? It was just a funny circumstance because people wouldn't think that people in politics can, afford that kind of thing. Not to mention that the dues at the country club that I was at, the dues were extremely, extremely expensive. All right, we're talking six-figure dues just to be a member at the country club. So, I, as a capitalist, cannot get mad at someone for being successful. However, the way that success is done, the way that people do business, has to be taken into consideration. How you do business should be just as important as why and what business you do. And if people that are in the political atmosphere are making more money than people who do labor, yes, it gets to the point of where it becomes more like theft than actually earning your keep. And so when that point comes, that's when you know that there's it's destructive to the economy. You cannot have theft on that level, essentially, and expect to have a well-running economy. It just doesn't work. So anyways, guys, right. So there's not much happening in the market right now. I don't want to take up your time. I enjoyed the discussion with you guys, though. But I really want to get to these emails. I know you guys spent time emailing me. I really want to get the replies out to those emails done tonight. So I'm going to go and do that right now. I want to get them out before 12 midnight because I got to start preparing for the for the Frankfurt session. All right. So I hope you guys have a prosperous night if you do trade between now and then. Yeah, no problem, bro. No problem. I'm going to send it out. It's going to be basically what I have written up so far is some very brief instructions as to how I want to run it. You know, because my number one thing is to not over leverage my own ability to answer customer service or give people attention. So I'm really putting the brakes on how many people I let actually become a member. Because I've seen instances where people just allow a membership program to get out of control, and then, you know, if you don't tend to people's questions, then of course it becomes a bad atmosphere. You get bad mouthing of your program when your program may actually be really, really good. I just want to make sure that none of that happens, and I want to be responsible when it comes to being able to give people the service that they require, especially when newbies. There's a lot of new people in this room that don't really understand Forex, and so I just want to make sure that that process of onboarding goes smoothly. Yeah, no problem, Jay. Did you email me? info@fitbusinessman.com. If you're interested in the beta, this is essentially how I'm doing it. I'm giving everybody a week of alerts for free. All right? Cool. A week of alerts for free, and it's going to be $97 monthly, which if you're trading even a mini lot, sometimes we'll make that back in a single day. I mean, most of the days we have made it back in definitely 2 days, but you'll make it back even in 1 day. And people will say, well, why would you even charge for it at that point? Well, the charge becomes necessary because there are certain people that I just don't want in the program, you know? info@fitbusinessman.com. info@fitbusinessman.com. And plus, the $97 a month becomes a baseline if I do choose to offer, you know, yes, Young, that's it right there. If I do choose to offer things in the future, people will get a sense of what the quality is based upon, you know, what $97 brings in value. My thing as a marketer and as an entrepreneur is that if I charge for something, I want to make sure it delivers 10 times the value of what I charge, okay? And they've done studies, and they know in marketing that if a product or service delivers 10 times the value of what people pay out of pocket, that they're satisfied with their purchase. And so that's what it's about, is me finding a way to deliver 10 times the value of whatever I charge an individual for a service or product. That makes sense? But yes, you can just email me. Don't forget to include your Periscope username, your first and last name, and just a very brief background. It can be one paragraph of where you're at in your trading career, if it's totally new to you, if you've been trading and then you dropped off. Wu-Tang Clan, what's up? Man, it's been a while since I heard a Wu song. How much can you make from Forex a day? Great question. It depends on your leverage. It depends on essentially how many lots you control, or fractions of a lot. Dollar bill, yeah. Yeah, options, you know, coming from options, there are a lot of benefits that Forex has, and then also there are some things that are much different. For instance, of course, Forex, you don't have to worry about the volatility aspect and how that influences the option prices. So you don't have to worry about many of the components of the Black-Scholes formula. And you actually get a boost in liquidity, so you can use strategies that don't necessarily have to be very cautious about liquidity, because Forex markets are always liquid. So it's going to be a little bit different, but I will say that options are extremely hard to master. So if you've got a mastering of that, then you know, a great Forex strategy would not be too far away from your understanding, if at all. So, you know, in terms of how much you can make, it depends on the lot size. If you're controlling a standard lot, which is 100,000 units of a currency, and you're making, you know, 50 pips a day, at that point, you know, you're going to be making essentially $10 a pip, okay? And if you're making 50 pips, 50 times 10, so you got 500 right there. It may not sound like much, but some people control multiple lots, so that's just a lot size of 100 units. Some people, they'll go 10 lots, they'll go 20 lots. You know, if your pip size is $100 a pip and you're controlling 10 lots, now you've essentially turned, you know, that one single pip that was $10 into a $100 lot. You know, now you've got a $5,000 day. A lot size, that's a good question. A lot size used to only be, you know, 100,000 units, until the automated, you know, electronic systems came along, and a lot of brokers started offering what are called mini or micro lots. And so, like, the mini lot would be considered 10,000 units. Okay, so a mini lot is 10,000 units. Micro lot is 1,000 units. You're not going to make much with a micro lot. It's basically for people that, you know, I don't even think many brokerages offer them, but there are some Forex brokers that do offer the micro lot. And that's, you know, 1,000 units of currency. So you're not talking about a very high amount of leverage there. So, you know, in terms of what you can make, it's pretty much like options in that you can make pretty much an unlimited amount. The leverage is there because you can go 50 times your account value in leverage, and most brokers will still allow that. Give you a trade. Well, we're still long right here. We've been long since 1360. The micro lot. Well, don't think of shares. Think of it as units. Think of it as units. But I mean, I guess it's kind of, I guess it's an equivalent to shares, but there's no ownership in terms of, you know, you don't have to worry about dividends and all that stuff. Basically, you're just controlling fractions of the currency. No, you're not buying it at that price. It's basically fractions of the currency. And so the amount that you control would be the units divided by, like, the current price. If that makes sense. It can be confusing if you've never traded Forex before, but the thing to remember is that if you just go back to what the pip size is, the pip size offers a good grounding of, you know, excuse me, the pip size offers a good grounding as to how much each candlestick would be worth in terms of the range of the candlestick. You know, in terms of the movement of a pip, the pip is worth, you know, $10 on a standard lot. So if you're looking for large movements, you can always take on a little bit more leverage to control more units of the currency. Most of them are. A few of them are just here for their entertainment. I'm not too entertaining tonight. I'm a little bit tired, but I'm usually I usually get a little bit of comedy going on when people walk in here, and but a lot of people are just interested in Forex as a whole. Of course, Forex is pretty hot right now, and the reason why it's hot. And first of all, let me tell you guys why I'm trading Forex versus, say, options or equities or futures or any of the other vehicles. All right, a market's a market. If you have alpha in any market, you can make money. All right, so alpha is your ability to earn in excess of whoever your competition is, whoever's taking the other side of your trade. The thing with the Forex markets is that currency wars I see as a definite outcome in the near future. Okay, we have a lot of volatility right now in the Euro USD cross, and a lot of people are playing that market, so it's very liquid. All right, it's very easy to enter and exit. You usually only have a 1 to 3 pip spread at any given moment on the major currency pairs. Jim Rickards, does he believe that as well? I haven't read his stuff in a long time. You know, currency wars are going to definitely become part of the future. I'll probably read some of his stuff tonight if he believes that. I haven't read his stuff in a while. But we're basically in a race to the bottom in terms of currency devaluation. The thing is that not every country can actually perform the inflation or, you know, the liquidity injection at the same time. Yeah, I haven't read any of his stuff recently, though. I want to see if he's in the news, if he's saying anything about it. How much starting capital do you need? Good question. Most Forex brokers will let you lever up at least 50 times. So 25 to 50 times leverage is what most people will come into the game with. So you don't need a lot of working capital, but the problem is that the more leverage you have, of course, leverage is the infamous double-edged sword. It becomes increasingly easy to lose money the more leverage you have. Yeah, that's part of the reason why a lot of people go into Forex, because a winning strategy can actually compound pretty quickly. Yeah, that's another thing, is that people that come in with low account sizes usually get B-booked. They usually get the brokerage taking the other side of the trade, and they usually often lose based upon statistics strictly because they don't have money management. I mean, if you have good money management, you're not going to be starting an account with a low amount of capital anyways. Yeah, it's basically airplane trades all day. Yeah. I mean, the thing that you always want to look at is your acceptable loss. How much leverage do you want to have in terms of how many units are you going to control? So it's just very basic math. If you're going to try and control a normal lot size of 100,000 units, you know, if you're at 10 times leverage, you need 10K in your account. If you're at 20 times leverage, you need 5K in your account. Make sense? But I mean, most people, yeah, so like 20 times leverage, you'd have 5K in your account. You're controlling you're controlling a round lot, they call. And, you know, we're talking $10 a pip, which if you're making, you know, 100 pips a day, in a very good case, if you're making 100 pips a day, you're doing very, very well. Today, the algorithm took 200 pips in a day, which is not normal for a trader under any circumstances. So that's my disclaimer. It's not normal, although we've done it quite often in the last few weeks. And 200 pips times $100, if you were controlling a million lot, is enough money to retire very early after a year of trading. So is the money there? Absolutely. That's hilarious. Hey guys, Vanilla Ice is on Periscope if you guys want to leave my room and go watch Vanilla Ice real quick. Just saying. Just saying. I'm not bullshitting you. Vanilla Ice is on Periscope right now. Example, you start with $50. You only want one. I don't think there's a broker out there that would let you start with $50, man. I don't think that would even meet a broker minimum. But you can go to, I mean, you can go to different, I don't know, maybe you can get some broker in like Uzbekistan that would, you know, give you like 100 times leverage on a $50 deposit. I don't know of anybody. You got to have risk capital. Like, yeah. Take that $50 and go have a really nice fucking steak, all right? No, I'm not picking on you. I promise you that's not the case. But if, like, $50 is not enough to put at risk, if that's all you have to start an account with, you're not ready to take the risk of trading. You need to really focus on your cash flow and on your very basic financial knowledge to get to the point of where you have risk capital. Because in the end, you know, I don't care what any trader will tell you. There is a point where a trader will take a very large amount of cash flow as opposed to having to step in the market and take risk. If that makes sense. You know, if you give most traders, you know, the coin flip. Heads, you make $1 million a year with zero risk. Tails, you make a max of $10 million a year, but you have to risk. And every time you go into the market, you're going to take risk. I guarantee you there's a few traders at some point in their life would say, do I want to keep staying up till 3 a.m. in the morning or staying up all night and putting my money at risk? Or can I just take the D risk? Can I take the no-risk trade and just make $1 million a year cash flow and not have to live that lifestyle where I'm waking up early and going through the stress of being in a trade and not sure where it's going to turn out? Do I mentor? This is mentoring is what I'm doing right now. I mean, through the Periscope. The 7 people that are in here, we talk about everything from basic economics to, you know, coding. So it's like, no, Forex is risk. Forex is risk. And that's what I'm telling you. My point is that if you took a bunch of Forex traders and put them all in a room and you say, listen, we're going to flip a coin. Heads, you get to maximize your possibility of making $10 million in a year. We'll front you the capital to do that. Tails, you take $1 million a year in income and we'll just pay you to do research on Forex with $1 million a year in income. There's a lot of Forex traders that would just give up trading and take the $1 million a year with no stress. I don't know if it's going to tank at 2 a.m., but we've been flirting with that 1335 level. And if we go out to the daily, Prime has already fired off a short position on the daily chart. So at some point we will break through that 13, that zero Fibonacci level at 1335. Essentially, yes. The markets close Friday at 4 p.m. and they open Sunday at 5 p.m. essentially. So it's a 24/6 trading opportunity, essentially. Banks and institutions do have non-retail markets that are open 24 hours a day in Forex. But retail traders do not have access to those markets. That's mainly through interbank swaps and interbank markets. This is the Thinkorswim platform through TD Ameritrade. So, you know, when you see price movement like this, guys, no, Prime just went short again. We basically had a 6 pip short, a 5 pip long, and now Prime is technically short again. But what I usually do in times like this, where there's essentially we have a descending triangle forming here, it's a very bearish price movement. I usually, because the algorithm is taking into consideration all of the orders that are currently on the books and the force and a bunch of other different data points, if there's no orders that are like pushing it in a direction, obviously the algorithm doesn't have as many data points. It's like taking a survey, right? And you take a survey, not to be vulgar, if I give you guys a survey, tits or ass, right? And there's 7 people in this room and everybody says, oh, I'm an ass guy. And then we go and say, all right, so it's a unanimous decision, most guys are ass guys. Well, that was only 7 people, you know what I mean? So it's like, you could go into a different chat room and other guys say, I'm a boob guy. And the reason why I use that example is because it's kind of like it's a binary thing, right? You like one or the other, and if I say you have to pick one or the other. So we make it completely binary, like long or short. So we make it completely binary, like long or short. This is 1364 is becoming a sig level. So what do you mean by rejection hammers? Usually when a sig level forms like this, it represents that either a lot of orders are coming into the market at this price point, or they were already in the market at this price point, 1364. So this is not a Fibonacci level. This could be, a pivot. It could be a confluence area for someone's, some type of pivot. Sig level, I just call it a sig level because it's significant in terms of how the algorithm is perceiving the order flow. And so sig levels tend to either act as major support or resistance, even more so than a Fibonacci. I don't know. I just you know, I stopped using Bollinger Bands and all that stuff. I don't use any lagging indicators. I don't use any lagging indicators. So, you know, if Prime says long here, then I'm long until it says short. So at this point, at 1364, right now it's saying long, so I would be long if I were in this position right here. Well, I stopped playing the emotion game, like trying to read charts quite a while ago. That's the reason why I made the algorithm, is so this way that the math takes care of itself, you know? The algorithm has a better track record than myself, that's for sure. So at any given point, we have a binary outcome, right? If we just say heads long, tail short, if we flip that coin enough times, we end up with a normal distribution. Not normal distribution, sorry. We end up with 50% probability of either becoming true. So the idea is that the only way that we can win a binary type outcome is to have money management. And so we allow more to the upside than the downside in terms of equity. We allow more gain than loss. That's one way you could play every single trade in a way that does not require an algorithm, right? However, because the algorithm does more computation than I could do myself, I allow the algorithm to take the position. And if I feel it necessary to add money management into that, give you a heads up. Okay, no problem. Well, the SIG level, what this usually represents is sometimes there's a lot of switching of orders right at the SIG level. So I have had a SIG level like this present itself and had to swap my position 3 or 4 times because of the order flow. Alright? So I've taken losses of like 10 or 12 pips literally just because of the system